Yo, 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 yo. What up, guys? What up, guys? How are you all doing? I hope definitely that you had a pretty good week and also a chill weekend so far. And yeah, I I definitely I'm definitely very excited to do another session, another weekly forecast, and we're definitely also looking into the week, into the last week, what did happen. A little recap, doing into the majors, and yeah. Before we start, just a really quick reminder: trading with real money does involve risk, and I'm not a licensed financial advisor, so everything you do or don't do in the markets is on your own. I'm just here to show you my opinion on the market, just for educational purposes only. And yeah, I'm pretty excited. Let's go right into it. All right, how are you guys doing? And yeah, we are starting up with the Euro USD. Our initial idea with the Euro USD was to trade lower out out from this reaction on the 4-hour candlestick right here, a few move, and this is our real idea. As you can see, we didn't get this, but that's fine as well. Which opportunities did we have? Also, yeah, in case market didn't go our way, we still had opportunities to trade. Some maybe a bit more risky, some maybe pretty decent. So let's look into it. So we had market open on Monday right in here, and as you can see, we had the idea with the liquidity down here and a few resistance, institutional candles and imbalances to trade down lower, and we had this hourly institutional candle which we got over this high, captured liquidity, created kind of a new low, kind of equal lows, and market came into it, had a slight reaction. Market opened here, came back up, and what did happen then? Market greatly went for the high as well, but at the same time, market created equal highs, another liquidity pool. So if we just watch this, okay, we had this low, market created this high, and yeah, I'm gonna go into the 5-minute. So yeah, we had this liquidity grab right in here, and market definitely greatly came down lower, weren't able to go past this high, and yeah, now we are where we are now. I mean, as you can see, we had inner liquidity, okay, but because we didn't trade higher, that's not an opportunity for me. Yeah, not really that interesting. All right, so what I can see here as well is that after we traded a bit higher, see, we had this situation right in here, we aim for the liquidity and we traded lower. You can see we had this range as our last. We had a a few point of interest. We had this imbalance right in here. Market reacted a bit, and yeah, not really that best opportunity because high liquidity grab. You shouldn't just trade there to the upside. There's a bit of evidence definitely missing. We also had this institutional candle. Market reacted there also just a bit, and then we came below this. So that's actually the last opportunity you have for the upside. If you are as I am definitely have the opportunity, the opinion on the market that it shouldn't get below this low. Market reacted here, created a higher high continuation, and there would have been an opportunity to trade this market higher. I'm gonna go deeper into it just to look at it. I actually didn't participate in here. I didn't really notice it. I saw the huge liquidity grab, and I was like, I don't really want to take the risk to buy here right there at the top. So that's definitely a more risky trade, so to say. You can see we had this 5-minute trade reacted, created a new high, break of structure, little imbalance in here, and that's your entry. Okay, we had a reaction. 1 minute, definitely we had also break of structure, so that should have been your reduced stop loss. Yeah, maybe 25% of your initial risk, but that's a fine loss. And then we trade low, get below this low, create a bit more liquidity, and then market dives lower, goes straight above the new created liquidity because we just a bit higher, not enough for me. Then overnight traded right into this institutional candle again and traded higher. So the next day, pretty much we are in here 7 o'clock, and we have two point of interest. First point of interest is this 1 hour candlestick. Second point of interest is this 2 hour candlestick with imbalance in here, imbalance in here. And yeah, those are not direct entries for me. So I watch into the lower time frame. What did happen here? Pretty much not that much price action. You can see we had this last move down. Market traded into the not even into the, we have the lows at 1.08815, and we have the low at the 1.08814. So yeah, it traded in by 1 pipette. That's just a bit yeah, it's definitely not enough price action to trade something for me. And yeah, then the next day on Friday we created a lot of liquidity, took this out, created a new high. And what's the idea for the following week or next week? And I slightly talked about it last week. If we are not able to continue this downtrend to the sell side, we have two possibilities. Possibility number one, we go for this liquidity, trade maybe inside this daily candlestick and see something like this. Second is to trade above. So I would go actually for buys into the next week, but definitely if we capture this liquidity, the sell side, you definitely should be aware on the sell side. So let's look into it. As I already that right in here we have this little liquidity grab and push up. Normally the Friday liquidity gets taken, so I'm more thinking, okay, we have this 1 hour right in here. It is able to trade. If market is able to trade right down there, I think we can get definitely something like this, trading to the daily. And we also have a good imbalance right in here. Alternative is that we reacted right here in this week. And because we also took this liquidity. Yeah, pretty simple. What if we traded lower than this? Yeah, we have something in here, but actually, I'll delete all this stuff here. Actually, if we trade down there, I would not go for buys here. Why? Look at this. Look at this. That's way too attractive for the banks, in my opinion. So next step where would be trade below this, capture this, and then maybe go higher from here. I wouldn't expect market to go below here, because just look at the structure. We have 4 hour. It looks like, okay, we had this up move, retracement, up move, retracement, up move. If we break the structure, or if you see this as one up move, okay, but yeah, in this point of interest, you definitely just should be aware, okay, the direction is not that clear. And yeah, that's so far so good with the Euro USD. Actually not that interesting this week for any trades. Yeah, let's go for the GBP USD. Same idea. First of all, was to continue this for our trend to the downside. We created a lot of liquidity here, right on the Monday. Where is the daily? Kinda weird. I don't know. Just gone. The end of session break. Ah, there we go. There we have it. So we had on Monday the situation that we had a situation that we had this liquidity right here, this liquidity right here, and then the sweep of liquidity right here. And on the other side, we had also a liquidity sweep. So upside, liquidity taken, downside, liquidity taken. And what did we have? I looked into this lower time frame. Did there some form of trades, setups, something like this. You can see we had to open right here. It created liquidity, took it out, and weren't able to trade higher. and then came back into this candlestick, went higher, took out liquidity again, and then yeah, with this liquidity grab, market went above this high as well. So yeah, so that's actually pretty much it. So I'll look into the 5 minute. Oh, right. No, here. Here's the 5 minute. We have this lump of price action. Market traded into it. Yeah, we had this liquidity grab, so that's not, if this is the liquidity grab, I'm not trading here or buy. So, way too risky. Market went higher, and what did market do afterwards? We had this correct, yeah, this little retracement, and market moved straight up higher for the liquidity, for the target we had. If market is not following the forward trend to the downside, and we had this 50-minute candle. Market traded into it, and there were an opportunity. Why? Because we weren't able to break this high, and we created kind of equal highs with, yeah, low resistance highs. And so if you look into the structure right here, kind of tough. We actually have something like this. Market created a new high, and then also with this low here, you can see we took out this two lows with this move. And 5 minute, I don't really like it that much. We have almost 50% wick, and the imbalances are not that nice. I delete this for a sec. So that's actually pretty decent entry. So we took liquidity on the downside and had this imbalance. And then, yeah. Yeah, so we have right in here our Fibonacci levels. That's pretty nice. M4 entry with a new target. Those highs is a target, our targets, and we go further. See, market. We had the idea, okay, market can go from here lower, but we can capture the liquidity and then go lower with the reaction on this mitigation. Or the imbalance is definitely also a bit open as well. So target would be for me, if we trade this right here, -4 minute, stop loss right here, target would be the 12.5 minimum, and then we have the mitigation candlestick right in here with the 1 to 15, and that's pretty much the entry. 1 to 3, 1 to 5 partitions, and yeah, that's pretty much it. That's a pretty good win. And as you saw earlier, I marked it up because I weren't at the market at the time, didn't participate in this trade, but I was like, okay, if market comes back into here, that's an entry opportunity for me. I also set here positions on my MetaTrader, but as you can see, market just traded higher. That's fine. But what do we have as well? You can see while market traded higher, we had a little move down, took a bit liquidity out, created a new high. With this move, we created a very, very good imbalance. So if we have this right here, boom, 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 and we are right in the move. So that's our trade here. That is this. That's another trade. I didn't notice it, or was it Tuesday? Yeah, it was Tuesday. I was not on the PC. Kinda cringe. It is what it is. Yeah, but that's definitely this move. Decent order flow. Okay, continue. We broke this high. Market is in the rest imbalance. Okay. And we weren't able to break this low. So I marked up a new break of structure. We had an interesting zone right here for the sell. Liquidity up to the upside. Market just didn't react in any way. So we just went higher, created more liquidity, took it out, and here the break of structure goes here. Market didn't trade lower, and then we went higher, and there were actually no good opportunity. Yes. All right, then let's go for the AUD USD. So we have the AUD USD right here. Market opened right in here. As you can see, our idea was to number one, we had this M30 move, trade from there lower to get the liquidity, and number two, take this liquidity out and react there and go lower from there, target this liquidity. As you can see, we didn't trade right into the M30 move, but we took liquidity out. And what actually did happen afterwards was market traded low, made a break of structure, and then reacted right in here in the 30-minute break of structure, traded low, and then we can see this market structure in here. Delete this for a second. What did we have right in here? We traded high, low, lower high, lower low, and then we took out inner liquidity. We created equal highs, took those out, and then created the liquidity trap in here, and market traded back into this liquidity trap here, boom, and then traded low. This imbalance was still open, so that's actually the perfect entry. Market traded into it, Yep. And went lower, created a lot of liquidity to take, took this liquidity, reacted kind of in this institutional candle, and then traded lower, and that's your first trade. And if you didn't go in, I wouldn't trade this right here. That's from the structure point, it's not that easy. So we had this break of structure, and that's your second entry. And yeah, after this move, reduce your stop loss to this. The market came back up here. Okay, that's fine. But then traded lower, traded lower, traded lower. So the target was the liquidity. So we reached our target and then traded back up higher. My next idea was, okay, we had a pretty balanced out price action right in here, and that's a single point where market should or could react. We have this 50-minute market reacted there, came back lower to this move right here, came back lower again, took out liquidity, and then actually market went back higher. So from the sell side, that didn't look good. Market traded higher with a huge move. We got this high in here. In my opinion, we have to look into the lower time frame if there were opportunity for us. You can see right in here, we took this high, that's a break of structure. Market came back lower. There's a new high. That's maybe an opportunity. Market didn't reach this. Correct. Here, retracement, new high. That's not the best candle. 4 minute. Oh, that's a nice candle. That's a nice candle. There we have our breaker structure, we have our imbalance, we have our institutional move, and we had a reaction. Boom. That's definitely your break even scenario. And market trades lower, trades equal lows, and then goes back up higher. So, in my opinion, the opportunity was definitely there to see something like this. Go below the liquidity, boom, and then go higher. We didn't get this, but that's fine as well. And I'm gonna skip. And market traded higher. We had our second opportunity in here. But traded a bit lower. Not really that good price action here. Our last up move before the down move. It reacted, weren't able to break the low. So yeah, retest. Yeah. And it went higher. So after market breaks this high, there definitely is opportunity to buy, but I wasn't that sick. Yeah, that's true to buy a market here. But to be honest, there's no real reason to go for the downside. Because we took our liquidity down here. Okay, we have imbalance, but really on the liquidity side, there's nothing. Then we had this trade here right in the morning, 7 o'clock. It's kind of lucky if you, well, in my situation, a bit earlier at the work, or yeah, on the PC, to be honest. That's a pretty good entry. Take this institutional candle imbalance, but timing wise, not the best of us. better on the timing. This right here is, you can see, new high created. Okay, new high created. That's the end. Good, order flow to the upside. Target, as you wish. Because we traded above this, the target definitely those highs, and you could have gone for the 4-hour institutional imbalance open. It would have made a lot of sense. As you can see, we also reacted right on this. A good target level. Yeah, the following days, yeah, we took out liquidity. Market never came back down. We had created a liquidity pool in here, same as in the GBP/USD, and market at this up move. That's not a trade for me because we don't have any imbalance, but interesting 50-minute candle. Market had news, took out this low, this low, this low, a lot of downside liquidity, and then came back up higher. Market retraced back down for the next week. I would definitely say we have this daily institutional candle, this right here, where market can get back down. And in addition, we have this stall right in here. Yeah, it's not that beautiful. I would just mark up the 4-hour. But yep. And I would look out for sells more than for buys, because we had a pretty hard push to the upside over the week. See, we had Monday, a bit to the sell side. We had Tuesday, kind of even. Then we had Wednesday to Friday, just full bullish mode. And yeah, probably if we can get a retracement in here and look for other buys in those levels. We also have imbalances right in here. And yep. All right, following up with the USD CAD. Initial idea was to continue the price action, and as you can see, we had on Monday pretty much no reaction on our 1-hour institutional candle. What was actually better, we took this high, we created equal highs, and market didn't care about it anymore. Traded a bit lower, took out this liquidity, and yeah, traded higher. This for me was just not that interesting, because we didn't trade above this high and didn't trade below this low. It's just channel, or just no, it's just not a really good buy or sell trend, upside or downside. So I just thought, no, I'm not gonna take any trades right in here. But in our bullish point of interest in here, we can see we're right at midnight. Worst timing ever. Yeah, market kind of creates this high liquidity. Okay, it takes it out and goes higher. And yeah, if we watch a bit back, did we have an opportunity? Taken on the downside. Okay, we had a sell move. And market, you can see we had a sell move. Market just didn't react. Okay, we had this small reaction, but we weren't able to trade above this high. So not beautiful. Not beautiful. As you can see on the other side, the sell side, we also have created liquidity, took it out, and baked it on this side. So there's no real reason to go higher. If we broke this right here, this up, So we had a higher high, followed after the higher low. That's kind of bullish trend right now. So maybe a re-entry right here would make sense. Not like this. It just screams to me. No, don't take me. It doesn't make sense. Yeah, so far so good. Idea for the following week. We weren't able to take. Oh, we weren't able to take this liquidity up here. So we built a lot of liquidity on the upside. But to be honest, I think we are gonna stay bearish for the next few days because we took out this low. The other lows are targets as well. Next up is this imbalance. Yeah, this is for imbalance. This is low right here, and then see what happens in here. Something like this. We go lower, maybe go higher, or if we just get the reaction, or just a continuation of the sell side. That's it. Yeah, pretty simple. I think there were a few good opportunities. In my opinion, the AUD/USD was the best in this week. I took a trade there. I went break even, or I reduced my stop loss too fast too far, and I got stopped out before the actual move happened. Yeah, that's my main trade, and yeah, so far so good. I hope you enjoyed the session so far, and I hope that the following week I'm gonna bring you some pips, some profits, some percentages, and yeah, as far as that, I'm gonna give it up and let you go with a bit of music. Yeah, and yes, that's me. Tobias. Yeah.